If you do what everyone else is doing, you will get the same results that everyone else gets. Now, let me just start by giving you a quick rundown on what I've seen and what I've gone through in my working career. So I've been in lending now for just on about 13 years. So I started during the GFC on ComSec, which is a stockbroking platform, and then I did about 7 years there. The majority of my time was spent on a margin lending desk. Then I retrained on pretty much every other product on that business, on that platform, and then I moved over to CBA and I was a home lender there. Total time about 7-8 years, and then 4 years as a mortgage broker after that. So when I was in the retail desk and on the margin lending desk, people were not doing what they were talking about and discussing with clients about. So there weren't those people that were all talking about stocks and putting money into stocks, but what I did see was I saw a lot of speculation. People were using options, people were using leverage, and there was a whole lot of compliance set up. So there wasn't a culture of being in a stockbroking space and following through with that. So people weren't putting 10 or 20% of their check away every pay period into the market and building wealth that way. It didn't happen. And then when I went across to Commonwealth Bank, I was a home lender there. You would think if you were getting perks like auto rate matching with the big four banks, no lender's mortgage insurance right up until 90%, which is what doctors and lawyers get. You'd think if you had perks like that with, maybe 100 to 120 grand on a good salary after 2 or 3 years of being in the home lending space with a very good solid bonus of, over 50%. So you have a lot of lenders, if they're hitting their target, they're earning 150k minimum, and maximum, if you've been in the business for a while, some are earning over 250 to 300,000. But was I seeing a lot of talk about property? No. Did lenders talk about property a lot? No. Did I know a lot of lenders that while they were in the bank buy a lot of investment properties? No. Because I'll be completely honest with you, there's a little bit of apprehension that if you buy too many investment properties and suddenly you become self-sufficient, the bank may not like that, your employer may not like that, your manager may not like that. So that was in my experience in the banking industry. Sure, there were some, but they were outliers. And then you get to the mortgage broking space, where I've probably seen a couple of thousand fact finds of people on very regular in the Sydney market on between 80 to 120 each. So 2 adults, kids, a mortgage of 800 to about 1.2 million, couple of credit cards, 2 massive SUVs between 50 to 100 grand a piece, and people earning good money but living expenses way too high, and they're not getting anywhere in life. So they blink and then they get to their late 50s and they wonder, where is the majority of their wealth? Sure, they've put away 9.5% into super during that whole time, but they've got income here, but are they really rich or upper middle class? Probably on an asset basis, yes. But they've operated their whole life on nearly paycheck to paycheck, earning nearly 200 grand a year. So I really had to ask myself, do I want to live this way? This is what I've seen. Okay, and the answer is no. If I do what I'm seeing constantly, I will get the same results that everyone else is getting. So I chose to live my life differently. Hope you've enjoyed this video, and we will follow it up, and we'll see you on the next one. All right, bye.